right, let's do Facebook.
Facebook, guys. I do have a Facebook, but I think I'm going to cancel it.
All right.
Only keep it for, I'm on Instagram though.
Nice.
Yeah. So anyways, guys, Facebook right here. Last night it finished at 290.82 cents. Oh, by the way, we'll be getting 15-minute delayed stocks here soon. This is end of day, but 15-minute delay has been signed up for. Just needs to be signed up. All right, Facebook, guys. This is a huge company. $830 billion market cap. That is ginormous. Revenue, $86 billion. Net income of 29. So first off, their PE, that's an X. It's 28 PE. Profit margin, insanely high, 33.9. Expected for businesses that revolve around a lot of software because the margin, once you build the software, the cost to maintain is a lot lower. I think Facebook, I heard once Facebook was doing like 10 billion in revenue on 3,000 employees or something crazy like that.
Yeah, I mean,
how many employees do they have? We could look that up.
Yeah, we can look that up.
But it's an extremely efficient business, I would imagine. How many employees does Facebook have?
I guess the question is, can they keep it going?
58,000. Wow, that's a lot.
Man, that's a lot. Yeah.
That's a lot more than I thought.
Yeah.
Okay. No dividends. Their free cash flow last year was 23.6 billion. Average 5 years of 18 billion. So it looks like it's trending up, which makes sense for a growing business. Look at this, guys. Return on invested capital, 13%. Return on assets, 20%. This is pretty solid. They're financially, I've always said about Facebook, I love them financially. You're going to see why as we go further and further, but so far we have 1X on PE and 1 check mark on profit margin. So let's go to the income statement. The last 4 years, look at the last 5 years. 26.9 billion to 84 billion. Check mark there. Huge growth in revenue.
Huge.
Net income growth, 10 billion to 29 billion. Massive check mark. Shares outstanding, still a check, 2.88 to 2.85. It's still a check mark. But they did increase early on, and it makes sense. As you're growing, they're probably issuing more shares to get more acquisitions going for people to buy onto what they're doing. But now it's starting to stable off, and it is a check mark still. So far, we've had all checks except for PE. Balance sheet, this is going to be incredible. Cash on hand, $76 billion. Ready for this one, guys? Current liabilities, 15. Total liabilities, 31. This is the ultimate of all check marks. They have more cash on hand than all of their debt combined. Not just short-term debt, total debt. They could take their cash, pay off all their debt, and still have $44 billion left over.
Yeah.
That's an astronomical amount of money. So technically, you have to take it off their market cap, but their market cap's already so large anyhow, it's only decreasing by 5%, but it still is something. If the company was a lot lower priced, it'd make a very material difference in the value of the company.
Mm-hmm.
So let's go to the next one, cash flow. So as I tell you guys, the benefits of owning the Everything Money app, cash flow is cash from operations less capital expenditures. I've added this portion onto this is not actually part of the investing section, but it shows the free cash flow by year and the average. The 5-year average, 17.9. They went from 11.95 to 23.63. Now, guys, by the way, we got the acquisitions and dispositions on here too. But look at this. So we always say 20 times the 5-year free average cash flow. So the average is 18 billion times 20 equals $360 billion. So it's an X there, okay? Because the company is currently valued at 860 billion. So it's definitely an X. But this is growing a lot. So you have to decide to yourself, how much is this going to grow by in the future? Is this growth sustainable? Going from basically doubling in the last 5 years. Maybe? I doubt it. Look at the previous 5 years. 2 billion to 12 billion. It went up 6 times. That didn't sustain for the next 5 years.
Yeah.
So you have to sit there and realize it's probably not going to grow at the same rate. Will it still grow? I'm quite sure it'll still grow because Instagram is growing like crazy. They own Oculus. Facebook's trying to be like Google or Microsoft, things like that.
What assumption would you make for their growth rate?
I don't know, but the stock analyzer tool will allow you to make those assumptions in there, and it'll tell you a value in the future. I don't know. What would you think? Doubling in 5 years is about. Well, it's actually 4 years. It's actually because look, it's actually you go from 1, 2, 3, 4. So it's actually a 4-year growth doubling. That's 18. Call it 20% a year. I mean, to be conservative, cut it in half to 10%.
I think that.
Still, 10% is still a lot.
It's great, yeah.
It's still going to take $23.6 billion and put it into 35 or 36 billion.
Yeah.
But here's the deal. If it gets to 35 or 36 billion and you want to pay, it's a very mature company, 12 or 15 times the previous year's free cash flow. What's 35 billion times 12? 420 billion. That's an X still. It's still selling for well above that. Mm-hmm. So it's selling for double the free cash flow 5 years from now, assuming 10% growth and a reasonable multiple. Remember, as a company gets bigger and bigger, they're not going to grow as much. It's harder to grow. So you'd want to pay a lower multiple to be able to get a good return on that on their investment. I'm going to tell, obviously, you know what I mean. The company's too expensive. The company's way too expensive. But let's do a recap of the 8 pillars right here. Oh, that's incorrect. Oh, there's an error here. This should be a check mark. I think I know why that happened. But either way, bug. Look at this, guys. All in all, it's basically the valuation metrics that are overpriced. The same way it is with Microsoft, the same way there's a lot of tech companies out there. They have great financials and just terrible valuation. Here's the good news, guys. Microsoft was the biggest company in the world in 2000. And in 2012, when I said it was an awesome buy, I was told how stupid I was for not understanding tech and how Microsoft was dead. And now look at that was when it was I started buying it at $21, $22 a share. And now it's at $200 and some a share. It's considered a Goliath again. These things will go in cycles. There will be a time when everybody says, nobody uses Facebook anymore. Very well could be the case. You should see it in their revenue growth and their profit growth then. That's the same thing I said about Microsoft. Nobody uses Microsoft anymore. Then why are their revenue and profit growing by 8 to 11% per year, year in, year out? That's the thing about value investing you have to understand. Like, you can't look at the stock price. You have to look at the financials and understand that.
The other concern I have about Facebook is all this antitrust stuff, of course. We need to figure out where that's going to end. But somebody said that Facebook tried to buy Snapchat and they failed. And I look at that saying, okay, they failed, but they just created their own Snapchat on Instagram, basically, with those story things that they do. So that's incredible. Of course, they own WhatsApp. That's huge, especially overseas, communicating with people overseas. So, yeah, Facebook's legit. That's for sure.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.